ball. Not only are they copiously accumulating gold, quietly they reclassify it tier one. Since 1944, there's been one tier one reserve asset in the world, that's US dollars. Why would they quietly and not tell the public? I mean, our media does such a pathetic job. Why would they not tell the public that the dollar now has a challenger to its world status as tier one?
Welcome, everybody, to another episode of Inside the Markets presented by StockPulse.com. We are more than honored to be sitting down today with Andy Schectman. He is the president of Miles Franklin. Thank you so much, Andy, for joining us today.
Yeah, absolutely, Justin. Great to be here. Thanks for having me. Years drawn to an end. Things have really moved quickly, like spinning faster and faster and faster. It seemed like I blinked my eyes and the year's over. So anyways, it's good to be here and wrap things up with you. I appreciate it.
Indeed. Thank you. Our pleasure. So in 2021, inflation became a buzzword. So I attended a Bitcoin conference in, I think, May or maybe June. And there I noticed they were talking about a few things. It was the debt, central banking, and inflation. And I had a sense that inflation was going to creep its way into mainstream financial publications, and it has. Can you speak to the year in, I guess, financial headlines, precious metals, and of course, inflation?
Yeah, well, first of all, in terms of precious metals, and then I'll come back and answer the other two. What we've experienced over the last year or two has been a renaissance, an awakening in the viability and the importance of owning precious metals in a portfolio. We've seen an environment, courtesy of the Federal Reserve policy, that has seen asset classes really blow up. We've seen asset classes in stocks and bonds and real estate reach all-time highs, and that's due to the easy money policies of the Federal Reserve, where, as an example, hedge funds can borrow, hundreds of millions or billions of dollars at 2%, pummel it into the equity markets, and jack up the prices, create, in Austrian economic terms, a crack up boom where misallocation of capital and resources creates impossibility in price discovery, where houses have doubled, where 401ks and equity portfolios have doubled, where bond prices have reached all-time highs, factored against a very dangerous environment of all-time lows in interest rates, in an environment where a couple of fat white bankers choose the interest rates that are being paid rather than the market finding an equilibrium where it should be fairly priced, in an environment where we've seen in the last 20 months, 50% of every dollar ever created in the history of this country coming into existence in the last 20 months, an environment where in 2021, we have seen, according to Bank of America, inflows of 900 billion into the US equity market. Now that sounds like a lot of money, and it is, but when you contrast it to the fact that in the past 19 years combined, previous, 785 billion. So you're talking more money by over $100 billion went into the US stock market this year, as we've seen in the last 19 years previously combined. And I think there's a lot of people, maybe courtesy of folks like yourself, of Jim and Ivan over at Wall Street Silver, Chris Marcus, all the people who for the last several years have been fighting to get this information out to the public, the viability and the importance of owning precious metals. There's been an awakening and a renaissance. Our business is up fivefold this year. It was up almost that much last year. And so the price, more than anything, is really non-indicative whatsoever of the demand. The demand in this industry is off the charts. Getting product is next to impossible. So when you talk about inflation, when you talk about the craziness that we've seen on every level, geopolitically, politically, morally, socially, um, there's an awakening, there's a renaissance. And when you talk about inflation, um, you know, the inflation is a problem, in my opinion, that will not go away. We can touch on that for a second. Um, it's a bigger problem than just inflation because it's created a setup for some very big potential, very big problems. I mean, let's just talk on a broad scale. The CPI is the Consumer Price Index, is what the U.S. government cites for their measurement of inflation. It's a flawed metric. They call it at 6.5%. It was up 0.9% for the last month. If you annualize that, you're over 10%. But for the CPI numbers that just came out at just over 6%, 6.4, I believe, when you factor that against a 10-year treasury paying 1.4, you're guaranteed in this environment to lose 5% compounding over a 10-year period buying 10-year treasury. The government has incentive to understate inflation, so much so that food and energy and housing are not counted in the CPI measurement. You have to dig deeper and go into the core CPI, but the CPI measurement excludes things such as food and energy and housing, which have all increased exponentially. I think that inflation is here to stay. I think that the government talking about tapering is just that. You know, they say they're going to accelerate their tapering, but I think we have gone so far down the road that if they do, we will see a repeat of what happened in 2019, when the minute the 30-year Treasury got near 3%, the whole market threw up and they reversed course dramatically. So we are in a very, very, very precarious position. And I think that if you take a step back and look at what the biggest money in the world is doing in terms of gold accumulation, and we can talk about that, starting with the central banks, the commercial banks, the sovereign wealth funds, the family offices, they're massively accumulating gold and silver in this environment, specifically because of the dislocations that we're seeing all around us. And they're using price as a tool of misdirection, Justin. I think that they are happy to see four commercial banks holding the price of gold and silver down as they are gobbling it up hand over fist, whether you're talking the Bank of India, whose numbers are up 75 tons this last year, up 11% year over year. Excuse me, Serbia, they're at all-time highs. Their numbers are up 30%. Hong Kong, imports through Hong Kong are up 60%. That's the people of China. Alistair McLeod just came out recently and said that he believes that they have 28,000 metric tons. That would be roughly 5 times more than the US does, of which 18,000 is held by the people and 20,000 by the state. You can look at the Bank of India, the Bank of Turkey, the Bank of Poland, the Dutch National Bank, Bank of Austria, the German Bundesbank. They're all accumulating gold and silver hand over fist. Let's not forget the Bank of China and the Bank of Russia, who Russia just announced they have more gold in their reserves than they do dollars. So you're looking at a massive acquisition of gold by the biggest money in the world, using price as a tool of misdirection. And I believe it is because they see what is very clearly coming. The people in this country are being misled by a media who doesn't tell us really anything worthwhile. I think they are woefully ill prepared for what's coming down the pike.
Can you speak to the issues we've seen in the supply chain over the last year and how perhaps they're unique, perhaps in your life and definitely in my life? And also perhaps if you think they do, how they parallel to the 1970s or how they don't parallel to that time period?
Well, again, I don't know what the supply chain problems were in the 1970s. I can tell you that the supply chain problems here are certainly real. They are certainly real in anything that you're trying. Go to the grocery store. I was at the grocery store last night looking to buy razor blades, and Publix is the grocery chain here in Southern Florida, and there wasn't but maybe 1 or 2 packs of replacements, nothing that I owned. I mean, I needed the ones that I had. They didn't have, it cleared out. We bought furniture for the house here in April. We didn't get any of it until August. We can look at supply chain problems with precious metals. It has been a constant battle over the past couple of years, where for 2 years now, getting product is really very challenging, to the point where we've been doing this for 31 years, Justin, and so we have the ability to tap into supply chains that most people in this industry don't. They haven't been around as long as we have. But what used to be a phone call and 2 days later I would have whatever I wanted in my warehouse now is an incredibly challenging endeavor. I have 2 full-time employees that spend all day long doing nothing but acquiring product and running logistics. Let me explain. We have 1 employee who works in the middle of the night dealing with Austria, Australia, South Africa, the United Kingdom. We have 1 employee who works during the day who deals with the US, Canada, and the refineries in North America. Nowadays, we need to place orders 90 to 120 days in advance with all of the sovereign mints. We need to post a very large, we have to pay up front. We have to pay for the entire order upfront in full, which means you're paying large premiums, which is kind of a new thing in bullion of the last 2 years, higher than we've ever paid, and you can't hedge that. And you pay it 3 to 4 months in advance, hoping that the market doesn't swing on you, and you end up eating all of that premium. It's very challenging. And then you run logistics after you hedge the position, after you purchase the position, including premium. You have to then run logistics for what is months on end in order to make sure that it gets to where to our warehouse smoothly. And then you have to decide, when can you start locking in orders for that? Because if there are more supply chain disruptions, it's a problem. In 2020, when COVID first hit, between the US Mint and the Canadian Mint, we had $4 million worth of Eagles and Maple Leafs on order. And in this business, when you get I'm a US Mint authorized reseller, one of only 24 in the world. And when our US Mint representative says, yeah, ready to go, it's going to be shipped, you start selling orders to the public. Yeah, I'll have it next week. Well, in both cases, we had done that. In both cases, COVID shut down the mints, and we were, in the case of the Canadian Mint, almost 40 days with nothing. And so supply chain problems in a world that is thrown upside down is real. And then you add into the fact you have an environment where you have the labor participation rate at all time, and it's way off. And so you have fewer people working, many of which have been incentivized to not work. And you have more money being thrown at the problem through stimulus. So you have fewer people producing stuff and more people with money trying to buy stuff. So you have more money chasing less stuff. This is price inflation. This is supply chain bottleneck price inflation that I don't think is going away anytime soon, in the environment where all of the Western governments feel that printing their way out of this problem is the only solution. So I think we will have supply chain issues moving forward. Now, I don't know exactly how it played out in the 70s, but what I will say is that in the 70s or into late 70s into 80, you had an environment very similar. The only difference is the indebtedness wasn't what it was like. And Paul Volcker came in 79 or 80 and raised interest rates to nearly 20% to stop the inflation, to stop the problems. And when you talk about issues in this economy, can you only imagine what double-digit interest rates would do to this problem? It would create a problem of religious proportions. So I was born in 1970, so I lack a little bit of the perspective of what the supply chain issues were like back then. But I will tell you that in a world that is globalized, a world that is uh, been globalized for the last 20 years in terms of everything that we buy comes from offshore. These problems aren't going away anytime soon. And quite frankly, I think we'll probably experience 2022 will probably be worse than 2021 was. And I would think by a large margin, because really the Fed has two choices: inflate or default.
I want to get into 2022 and what you see really in the 2020s. However, I did want to touch on the indebtedness. Now, can you speak to this indebtedness from your perspective over the last 3 decades and how it's played out and where you see it's going? I mean, we seem to be quadrupling our debt rather quickly. Is that process only going to speed up? And are we going to be $120 trillion in debt in no time? What are your thoughts?
Well, yeah, I mean, we're already over 120 trillion in debt, and that's been admitted by the U.S. government when you factor in things such as Medicare, Medicaid, Social Security, government and military pensions. We exceed 120 trillion dollars. A trillion seconds ago was 31,688 years ago, and so I'm going to take you back on a little bit of a journey to answer this question, because I do believe that the biggest money in the world sees what's coming. If we go back, and maybe the way that I answer this question, perhaps it's an insider's view into what's happening. If you go back to 2017, you saw the German Bundesbank request to have all of its metal sent back from the New York Federal Reserve, and it was a very unusual statement because central banks have been selling gold at that point. And so within a month or two of that happening, you saw the Bank of Austria say the same thing, the Dutch National Bank, the Bank of Poland, the Bank of Turkey. They all said the same thing: we want our gold back. In 2018, those same central banks bought more gold as a group than they did in the 60 years previously combined. In 2019, those numbers were up 90%. And that's when the Bank of International Settlements in Basel reclassified gold as the world's only other tier one reserve asset next to US dollars. And so the central banks were keyed in a few years before this came out to start accumulating gold and to bring it home. If you look at what's happening ever since, the biggest money in the world, all of the central banks, as we just talked about a minute ago, have been massively accumulating gold. Why would they have reclassified just gold and not a special drawing rights by the IMF or a euro or a yen or a yuan? I think that the indebtedness, we have reached a point of no return. When you have the largest debt ever accumulated, really, in history, at the lowest interest rates ever, in human history, I think the big money sees the writing on the wall. Not only are they copiously accumulating gold, quietly they reclassify it tier one. Since 1944, there's been one tier one reserve asset in the world, that's US dollars. Why would they quietly and not tell the public? I mean, our media does such a pathetic job. Why would they not tell the public that the dollar now has a challenger to its world status as tier one? The fact that the central banks for the past 4 years have been going on 5, massively accumulating gold, the fact that gold is now tier one tells me that there is an end game for all of this. People talk about this great reset. We have massive debt acceleration where 50% of every dollar ever created in the history of this country was done in the last 20 months. And all of the big money is quietly accumulating gold. I think they realize that we have eclipsed the point of no return. And they are preemptively, I think, preparing for some event. Now, what could that event be? When you talk about all of this debt, a 1% rise in interest rates adds what, 300 billion to your to your payments on the national debt, let alone all of the unfunded liabilities. But what could trigger this massive issue where interest rates spike and the whole debt problem blows up? You see, when I started in this industry, Justin, 1990, you had an environment where stocks and bonds were inversely correlated with one another, where whereby stocks were called risk on, bonds were called risk off. And that's not the case anymore. In fact, stocks and bonds have lost their inverse correlation with one another. And if interest rates rise, it all collapses. Stocks, bonds, and real estate, it's the perfect storm. The whole thing collapses under a mountain of debt, and they can't raise interest rates. Well, if they do, it's a religious experience. And so I guess I would simply say to you this, that the debt is real. The debt's never going to be repaid. If interest rates rise, it only exacerbates the speed at which the whole thing blows up. And I think this is why the biggest money in the world has been accumulating gold, and why gold was reclassified tier one, and why the central banks have all repatriated their gold, because they see this moment in time where the bill has to be paid. And this is why I believe the Fed won't taper. This is why I believe it's all lip service. They just want us to believe that they're going to taper, that they're going to be tough on inflation, when in reality, their only way out is through inflation. If they try to do austerity, if they try to make the tough decisions and interest rates rise, this mountain of debt will absolutely come piling down. And again, it's the perfect storm where all the wealth in this country, stocks, bonds, and real estate, will come collapsing down upon itself. Look, let me put it to you this way. When you see 19 years worth of inflows into the US stock market in 1 year, coupled with the greatest insider selling exodus we've ever seen, where Elon Musk sells 11 billion in Tesla, where the CEO of Microsoft sells 50% of his holdings last month, as more money is pouring into the market, more leverage debt, more margin debt, all of this debt, all of it will have to be paid at some point. And so I think it's a huge problem, and it keeps the Federal Reserve up at night. But I think ultimately, it's going to create some really amazing values for people who have repositioned out of it. I think you will see real price discovery instead of make-believe price discovery that we've seen in this environment, where when interest rates find some sort of equilibrium between fair value and reality, you'll see housing prices halved and maybe halved again. You'll see equity prices halve. There's no real price discovery in this environment, and all of the debt that has been accumulated along the way at these low interest rates is going to be a very, very big problem to reckon with when things normalize. So I think it's the Achilles heel of the United States, no question about it.
Andy, you mentioned that 2022 would be worse than 2021, which was in some ways worse than 2020. Perhaps not geopolitically, perhaps not politically, but certainly economically. A lot of hard lessons were learned by people who hadn't thought a day about economics since 10th grade economics class, in which they didn't learn Austrian economics for sure, as you mentioned earlier. So what can we expect from 2022? And then also beyond that, if 2022 is going to be worse than 2021, what's the world going to be like in 2030?
Well, that's a tough question. I think what you're seeing is a move away from the dollar. As an example, you have the Chinese Belt Road and Rail Initiative, and I don't know if you're familiar with that or not, but the initiative is the largest infrastructure project in human history, and it is connecting Asia and Africa. And it's not just through roads and bridges and maritime channels, it's also digitally. But you're connecting 70 to 75% of human population right now, 40% of global GDP before industrialization. The United States is not part of this new initiative. You're seeing China strike deals unilaterally with Russia in terms of fuel, jet fuel and oil. You're seeing Russia strike unilateral deals recently with India, but more shockingly with Saudi Arabia and with Nigeria. Now, it is the relationship the United States has with Saudi Arabia since 1974 that gives the dollar its reserve status, its dollar hegemony, the protection of the Saudi kingdom. The fact that the day after we left Afghanistan, Russia announced a joint military cooperation agreement with Saudi Arabia the day after with Nigeria is one of the biggest events of all of our lives. And again, our media does a woeful job of talking about this. Google it, you'll see. The day after that, Russia announced in the Zero Hedge article I read that their nuclear submarines are now fitted with hypersonic ICBMs, the exact ICBM missiles that the State Department publicly has come out and said they are very concerned about. These are ICBMs that circle the globe in a matter of hours and hit the ground at the speed of an asteroid. They can't be knocked down, basically, is what they were saying. Russia, China, North Korea have this technology. The United States does not. That's their way of saying, do not even think of screwing with us the way that you did Saddam Hussein and Muammar Gaddafi when they made statements about selling their oil for euro. I think that the world is moving away from the dollar, and you are seeing relationships that are being struck both in military and in commerce globally, where 75% of human population is being moved away from the dollar. And oh, by the way, the Belt Road Initiative, all of the contracts are being settled on the new Chinese digital yuan. So you are indoctrinating 3/4 of human population into a new currency that I believe ultimately will be challenging the US for world reserve status. If a guy like Alistair McLeod is correct, and they do have 38,000 tons of gold, how quickly would things shift if they said, you know what, the dollar is spiraling down the inflationary drain. We are going to now peg our new digital yuan that 3/4 of human population are now being indoctrinated into behind gold. We're going to peg gold to it, and we're going to show the viability of this or the immutability on a distributed ledger. I think something like that, when you talk about 2030, I think there will be a move away from the dollar. And when you see the world superpowers striking relationships that the dollar is not part of, and they're all unilaterally being done in other currencies, not the dollar, I think it does not bode well for the US. So whether it be an issue coming out of OPEC where they say, hey, we're going to now issue, because we're being protected by Russia, and so is Nigeria, the two biggest OPEC producing countries, we're going to now open up oil in other currencies. It would be a massive problem, because overnight you would see a flood of dollars come flying home when we least want that, when inflation's already running high. And now you see a global wave of dollars because people can purchase oil in other currencies, perhaps their own, instead of having to buy dollars to first buy oil, as was the relationship that Kissinger and the Saudi kingdom agreed to in 1974 for our protection. But now Russia's right there protecting them as well. Does something like that happen? I think it does. Does a move away from the dollar by all of these nations, the Belt Road Initiative, these are all real big problems. So I guess this all factors into my belief why gold was reclassified tier 1, because the powers that be see this coming. Mathematically, it's almost impossible to not. The rhetoric coming out of Washington and our media has dumbed everyone down to not seeing this. But if you see the pieces that are put in place, like in a chessboard, usurping the dollar, the petrodollar status, that's huge. Making relationships unilaterally in commerce and in potentially in oil that exclude the dollar. 75% of the world setting up onto the most ambitious infrastructure project in human history that the US is not part of, or the dollar. These are all very, very big problems. And when you factor it into asset prices blown up to the highest levels ever, with factored against the lowest interest rates ever, it's setting up for the perfect storm for a very, very, very big problem. And, you know, when you talk about mathematics, and logic and economics, it's very difficult to escape them. You can delay the inevitable, but I think ultimately Mother Nature catches us. And it's like your best friend owns a bar down the street and you've sat at the corner every day for the past 20 years and never paid your tab. At some point, even though he's your best buddy, the good graces end, and you need to pay the piper. And that's what's going to happen in this country. And I think if we lose the petrol reserve status, that's when we will see some substantial problems. And the fact that Russia is now adding military protection to Nigeria and Saudi Arabia is perhaps the beginning of what could be the most significant relationship or a shift away from the current relationship that this country has ever experienced.
We've had the honor of sitting down today with Andy Schectman, the president of Miles Franklin. Thank you so much, Andy, for joining us today.
Justin, it's been my pleasure. I'd love to come back anytime. And for any of your listeners who would like to purchase precious metals, do me a favor, have them reach out to us at info@milesfranklin.com. I will personally make sure they get the best price in the country, period. Info@milesfranklin.com, and put StockPulse in the subject line, and we will reach out to them, send them a current price list, and make sure that whatever it is they're looking for, they're getting the best price in the country.
Thank you so much, Andy. And thank you everyone for listening to this edition of Inside the Markets presented by StockPulse.com.